All right, welcome to the new daily recap. And today it's Tuesday, the 4th of April. Strong push up. So let's immediately dive into it. What can we delete on the higher time frame? That's the first question. What can we delete on the higher time frame? Because I did I'm doing some testing, some back testing, and my charts were way cleaner on that. So what can we delete? What can we make cleaner? Um, this can go. 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 There you go. This is still quite relevant. We got a 1 hour inside that. Didn't even mark that on. We got a 4 hour FEG down there, which is not really of importance, but I still want to keep it for later maybe, because we can come below this and then look for the longs. That's quite interesting if we come below here. Then we take H lows, previous daily lows, potential previous weekly lows. If we don't come lower this week, this might have set the tone for the day on Monday. And like it's the 1st of April, so we might actually see. Let me see where March started real quick. March opened somewhere around here. There you go, 1st of March. So we opened around here on March. Open, low. So we gotta, let me do something. We gotta open, low, high, and then where did March close? Over here. Oh shit. There. That's the most ugly line ever. So open, low, high, close. And then we got this might actually, that will be sick. If April's not ranging, this could be the low of the month. Then we got a open price. We got our low price, then price will come up. Ooh, shit. And then we get potential swings up and then continue it. I don't know if you understand this. Open, high, low, close. Wait, maybe there's an indicator for that. And then the low, and this is basically the candle. So you can see it like this. Candle. Ah, if you understand this, it's nice. If you don't, well, I understand it. Just look up open high. What's it called? This. Open, high, low, close. Look up that and you will understand it. Basically how candles get formed. What the? Why is it not? Okay. So that would be sick. We can look for longs now. Also, keeping in mind that let me screenshot this. This is not relevant for now. This is really relevant for me. Telegram. 1 second. Where are my groups? Over here. All right, so we got that. This could be interesting because we were so much ranging over here. This was where we started the year, and we actually we were in that range. I went over that in the last recap. So we might now see change in character in the price behavior. We might see price shoot some higher prices, go for some higher prices. If that happens, we get a lot of trades based on the most recent structural lags instead of deep discounts, deep premiums. So want to look out for that. And this might be price might come up, and then yeah, this can be a sick month. Look for longs, I would say, but I don't know yet. Might be wrong, and price might actually come down now and just go like Why is it go like this? Open, high, low, close, somewhere over here. Yeah. Okay, let's dive into today. I don't have much time actually, but I like to talk charts so much. So London swing. All right, let's dive into today. Let's go on the lower time frame. So there was a trade. There was first of all we got previous daily highs up here. We got previous daily lows up here, and we had these. If we zoom out, we had these relative equals up here. If we zoom out one more, we can see that we have this one that we took out right now. So let's just already take this off. It's all noise. We don't need noise. No noise, no noise. We got this being taken. Not liquidity, huge liquidity pool. With these equals below here, they're taken. So I'm gonna clean this up later, but I like to keep this with the previous weekly highs and previous daily highs and lows because I might get some answers from that or gain some more knowledge from that. So let's keep that on for now. So we can see price came low, came up, and previous daily lows, previous daily highs. Then Asia, quite corrective. And we can actually see that this area didn't create a new high or anything. It was just low, high, a potential higher low. And the reason for me to look for longs here was mainly with the large liquidity pools above and knowing that the dollar was weak. Those were my main confluences. Then my secondary confluences were that we reached discount for this leg. So we had a, let me zoom out one more time. We had this bullish break, return to discount and continuation. This was our internal range liquidity for that leg that was taken out. And we broke bullish. But we didn't create a new high yet, but we did create equals over here. So yeah, pretty straightforward, right? Target the equals and then might see turnaround after that. Then going down lower, we can see that during London, this was a swing. A swing was created over here, pre-Frankfurt. Why pre-Frankfurt? Well, price was targeting higher prices. We already took some liquidity to the downside in the form of these lows and Asia low. So that was, in this case, it was enough. This was the real Asia low, early buyers taken out. I was waiting for this swing and then a return for an entry. Price didn't come back to that. However, if we zoom in to that bit of price action, we can see that actually there were order flow trades. So this is a 15-minute fair value gap, but there were order flow trades. If you look here, you can see break, another break, another break, another break. So you could have ended there if you trade order flow, but that's not for me. Another way, I saw someone taking trades like this, and this is actually very interesting. If you look for a break structure, right? So let me draw that. If you look to enter after a break of structure, so let's say you want to take a bullish trade. Why is it doing it like this? So you want to enter off a bullish break or after bullish break. So you want to enter over here. Why would you enter over here actually? If you're cool with like low risk to reward, why not enter on the break? Because that's your entry confluence, right? This is essentially the last confluence you need to enter the trade. So why not enter on that confluence? You will get a much higher strike rate. And you will just get in trades with. You have, the only thing is that you might have way lower risk to reward because your stops will be much larger. But this is like a great way. I really like this. I'm gonna dive deeper into this because I'm really interested in this. Because it gives you every trade, win or loss. Loss will be if you take the trade. That's what I said with my, but I upgraded from my 1 minute to my slightly higher time frame. If you take it from the 1 minute over here and you get missed out, you may miss a winning trade. If it's a losing trade, you will lose it anyway, right? Whether your stop is all the way up here or your stop is all the way down here. If it's a losing trade, it will take you out. If it's a winning trade, it might miss you. So why not just do it like that? That's why I changed to this then. So let's say an order block is all the way down here. I enter from here, somewhere here. That's already an improvement for me. For some, it might be, how do you say, not progress, but well, the opposite of progress. I can't come up with the word. So, but for me, it worked. And this might be even something I want to look into. Let's say you want to enter 0.5% over here, 0.5% over here, or even like 0.33% over here, 0.33% over here, 0.33% at the block, and then target the same high. And then you can get a low one, bank like 1 to 6, 1 to 7, close it. Then a higher one, you bank 1 to 4, close it. And then the upper one banks at 1 to 2, and you close it. And then you have an like a proper average of good trades. So yeah, I have to pick up something real quick. Be right back. All right, I'm back. I'm back. Okay, so yeah, so this is quite interesting, especially for this trade. And now I'm going to show on the chart. It's like this. So you enter from this, put your stop below that low, like this, and you still target the high. So you get a 1 to 3. Beautiful. That's a beautiful trade. Come on. That's a rocket, actually. There you go. So that's clean, but it didn't give me an entry. So as it came above Asia high, I said, all right, that's it. I can look for shorts maybe, but I wanted to wait. So we took previous daily highs, but we had these equals above here and we had a high above here. So I was not really into the shorts. Then I saw this happening, and this is pretty interesting. So there's no clean breaker structure. There's like this candle. We can see retracement up. So on the lower time frame, it looks like this: up, down, up, and your break, entry, continuation. So that's one. Then I said, could this be the tone for touchdown, tone for the day, or tone for the week actually? But price came up higher later on. However, knowing that that was a minor break, but especially the main reason for me marking on this, I didn't take it, it's outside of my time, as you can see. But the main reason for me marking it on was that we came above these equals, previous weekly high, 2 previous weekly highs taken. So that was reason enough for me to look for short. And it actually gave an it gave an entry, just didn't reach any targets. What's that? All right. And now we get into the New York, and this is where nice trade played out. So we got equals building up over here. There you go. Liquidity. We got this one, then we got that 50-minute fair value gap. Let's actually remove all those small little breaks. We got this. If we go on a higher time frame, what can we see? We can see that we still have this one to be taken, and we were not done yet. So expanding that, knowing that that is there as well. Let's remove this one on previous weekly highs taken, so we can clean it up. And let's remove that one as well. And let's remove that one. Now it looks way cleaner. And then knowing that, and also following just the most recent structure, and overall, if we zoom out, we know that we got this area above here to short from, which holds a 50% of that 1 hour supply zone, which we didn't tap into yet. So actually 4 hour, 1 hour, whatever you want to call it. So 50% of that, we didn't tap into that yet. So we want to look for shorts maybe above that 50% of the block. So going to lower. Expanding that. I don't think it will let me do that. There you go. And one thing we want to know as well, so let me get that on right, is if we tap into the 50%. And then let's go to the 1 minute. So we did tap into the, there you go. And there you go. So we tap into the 50%, we get a 1 minute swing break. We got our demand, we got our liquidity being taken. Where's my equals? So we get that sweep. Now let's clean up this. And let's clean up this. So we know that we tapped into that 50%. Then we got a nice swing break. On the 5 minutes, a bit hard, but on the 1 minute, we got it. Now imagine me being wrong. That would be very nice. Where's my equals? Why doesn't it show in the 1 minute? Pretty sure I marked it on. Maybe I deleted by accident. So equals target, and then liquidity. Now the set of equals being taken here. So liquidity to one side being taken, 50-minute demand, 50% of the demand reached, tapped into the fair value gap. Overall highs to be taken, and we got some nice liquidity building up over here as well. Like this. The longs are very valid. We got this structure, high, low, high, a higher low, a higher high. Internally, we got a low, high, higher low, higher high, higher low, higher high. So they merge, and we got that continuation. London swing, Asia lows being taken, Asia highs being taken, London previous daily highs being taken, previous daily lows still being valid. One thing, we are already above previous weekly highs, so that's one thing that's a bit whack, maybe. And then what the entry? So sorry, I'm just lining up my story. The story for myself comes from here. And I think I might be wrong though. This is quite a large breeding room. 4.1, 4.5. We might actually get deeper into it because the early sellers, buyers are not really there. But class this is your early buyers, by the way. This one equals, well, especially this one. I like this one better. because it takes out this high over here. Oh shit, I forgot to expand it. So first target might be here, but following the range. So we don't want to target this, we want to target higher. And by higher, we mean 1 to 5. That one gets hit by the news. So you could either take your partials here or take partials there. And then you take the rest of your trade out here. And that's a beautiful trade. Sorry, this one. 1 to 11 to a T. Woo! That's sexy. That's sexy. That's really nice. And then price just continues up. Most of the price action happened. It was in a hurry. And here, see a short over here, but from where does that come? So we tap into the high time frame area. This is like a 1 hour demand, 1 hour supply, 1 hour supply, I guess. Yeah, that's huge. And then going to New York again. No early sellers, nothing like this early buyers, not even that, nothing close. And then, but you get your break structure and you get a short entry. If you want to enter like that, I wouldn't, maybe, not sure. I don't think so. So high time for liquidity is taken. We took all the highs, so we might now see actually price come down and come below this. About 68, 76, 86. Yeah. Not really interested in it. I think price will maybe continue just up. However, it gives you a nice 1 to 4 even. So yeah, that's basically it. Peace out. I don't have anything else to cover today. I have other stuff to do.